my presentation is high level because obviously everyone's tax situation is very different. So it's very hard to get, specific about these things. But I would say, utilize the question and answer time at the end to make the most out of this and get answers to questions that you have that are specific to you. Okay, so I am Rhian. I own RDT Support. We founded it in 2017. And basically, as soon as I got my visa to be eligible to work, I knew I didn't want to go back into like a 9-to-5 corporate job because I had my daughter. She was only 2 at that point. So I started my business and it has just kind of grown from there. I have an accounting degree from the UK. I am not a US CPA. So I'm always very clear to tell people that. The only thing that the CPA designation offers that I don't have is the ability to audit accounts. So you don't necessarily need a CPA sometimes, unless you're doing, those specific kind of things. I am an approved IRS tax preparer, which means if you file tax returns, if you file more than 10, you have to be authorized to e-file through a system. So I am fully authorized by the IRS to do that. And I am incredibly passionate about female entrepreneurship, about people building businesses and brands that are flexible with their lives and add to their lives and don't, make them feel stressed and all of that kind of stuff. And I believe in investing and just creating financial freedom for yourselves wherever possible, and using businesses and having as many as you need to make that possible. So I offer bookkeeping, accounting, and tax prep services. So we pretty much cover everything from the day-to-day through to like full-on strategic planning and, IRAs and stuff like that as well. I don't offer the financial planning services. I partner with a couple of other people to offer those. But we take you right up and then work alongside with you to help you kind of do all of that as well. So starting at like the bookkeeping side. So bookkeeping, obviously, very basically is just the recording of all the financial transactions that come in and out of your business. It is super important for a couple of reasons. One, how are you going to do your taxes if we don't know what came in and what went out? So it's really, really important that we're tracking everything down. In the unlikely event you were to get audited, we need some kind of trail and proof that shows, this is the expense, this is why this was required for my business to do work, or this is the income that came in and this proves that I recorded and put it all in my tax return, and just make sure that everything is fully accurate. It's also important, though, to help you understand how your business works and how the money flows in and out, what products make you money, what products maybe cost you money but bring in work elsewhere, and helping you get the balance of how do I make money and how can I make more money and how can I make this successful. And sometimes that will be looking at cash flow and seeing the way that money flows in and out. Sometimes it will be looking at your product offerings and seeing which ones cost more to put on, which ones, once they're set up and then become kind of passive income, and having the ability to document that so that it provides you with reports that give you the information you need to be able to run your business and to understand the way that it works. There's really 4 main things that you record in bookkeeping. That would be the income coming in, the expenses going out, receipts, which is just like your evidence basically of the income and expenses. And then one big one is the owner's contributions and drawings. So that is whenever you put money in or take something out of your business. It's really important to understand that transaction, whether you're putting money in or taking money out, is not something that's taxable to that business. It is just you transferring money in and out. It's not income and it's not an expense. So it needs to be recorded in a different way to make sure that you're not then over-reporting income or over-reporting expenses. So we really, really need to make sure that we keep those things separately or record them separately. Okay, so there's a couple of different ways of doing that. And I know a couple of you have your own businesses, so you probably use systems, but especially for those of you that were freelancing, again, it can be easy not to do this stuff. And then when it comes around to tax time next year and you think, I have to declare this income, how do I get it into a format where it's what I need for my tax return? So I would definitely recommend doing it through the year rather than leaving it to the end if possible. However, if that does happen, it is not the end of the world. There are people around that can help you get it caught up, or you can do it. It just takes a little bit more effort to get 12 months of data together rather than do it on a kind of a monthly basis. So a couple of different systems. You can do a manual system, and this is really good if you have very few transactions come in and out. If it's a very simple kind of business and you feel you have the time to be able to manually write down in a spreadsheet every time that money comes in or out. So anytime you make a sale or anytime you make an expense, very quickly, people will outgrow that system, at which point it's time to move to like an online accounting tool. Everyone has heard of QuickBooks, and QuickBooks is fantastic, but it is expensive. I always tell people, they're like, I don't want to do QuickBooks. It costs me money, it's eating into my profits. It is, until you realize the amount of time you're having to spend writing transactions into an Excel sheet. It's probably that subscription is going to save you at least an hour a month, probably. So at that point, you think, okay, that subscription is probably my hourly rate. And that's when it kind of makes sense to kind of switch over. However, Wave is a free version of an online accounting tool. So it does exactly the same features as QuickBooks and Xero, but it is free. It is a little less robust than QuickBooks. So I normally recommend it to my clients who are service-based businesses, who don't have sales tax and don't have employees. To me, the triggers are a sales tax and payroll is when we need to go up to the, sorry, am I just hitting admit for everyone that comes in? Yeah, okay. Yeah, for me, payroll and sales tax is like the trigger point to go to a QuickBooks or a Xero. Up until that point, I see no reason for people to be doing a manual system when Wave is a free version online that we can utilize. What it does, it allows the connection with the bank feed. So anytime money goes in or out of the bank, it will automatically pull that transaction into Wave. So you no longer have to manually type it into the spreadsheet. You just have to go into the tool and categorize it each month. So it saves you a ton of time. And then it will also start to learn, every time there's a Google transaction, you categorize it as software. It will start to then learn as well. Next time I see Google, I'm going to auto categorize it as software, and just kind of help you keep everything streamlined, structured, and all in one place. Okay, so then people will always say, okay, what does the IRS actually need? And the truth is, the IRS doesn't need a huge amount. They just need to know what you made in profit so that they can tax you on it. And then they want an audit history in case they ever come back and look into it. They don't care whether you made $100 selling a piece of paper, or you made $100 selling this other piece of paper. They just want to know you sold $200. The level of detail is purely on a business side to help you understand how you make money on your end. The IRS doesn't really care too much about that. And then in terms of the information that they need, part of that will depend on how you're structured as a business. Most people will be a single member LLC or trading as a sole proprietor. At that point, all of your business profits flow through to your personal tax return, and you report them on what's called a Schedule C, which just is an extra piece of paper that goes into your personal tax return, and you file them with your regular household tax return by April the 15th. If you are a partnership, or you are an S corporation or a corporation, at that point you have to file a business return, and those get filed by March the 15th to give you what's called a K1, which is a bit like a kind of like a W-2 if you think about it as an employee side of things. And then that then goes on your personal return by April the 15th. So that shows you how much profit you had from your business to then report it onto your personal tax return. There are a couple of other deductions that, you can write off obviously any normal business expenses, and the official the official line from the IRS is that a business expense must be ordinary and necessary. So the word ordinary means that for your industry, this is a normal kind of expense. And one of the examples I always use is hair dye. So as an accountant, it wouldn't be normal for me to buy hair dye. That's not a standard thing that accountants buy as part of their business. For a hairdresser, though, that is a standard thing that hairdressers buy for their kind of industry. And then the other one is necessary. So you have to show that it was necessary for you to spend that, to buy that expense in order for you to generate business or to provide the business or service to your clients. So as long as it meets those two, it is an allowable expense. And then there are a couple of other things that the IRS allow you to write off to, and all of these things are put in place to actually encourage businesses and to encourage startups because it's good for the economy. So one of those is mileage rate. So I've put 2019, but here, the 2021 rate is 56 cents per mile. And I think for 2022, we'll back up to 58 cents a mile. So any mileage that you drive for business, and this doesn't include commuting to or from a location where you regularly work. So if you have a rented space, it doesn't include that commuting back and forth, but it would include driving to get supplies, driving to the post office to mail things, driving to meet customers or clients. All of those, as long as you keep track, you can write off 58 cents per mile for 2022, 56 cents per mile for 2021. Home office expenses. So if you have an area of your home, like this is my home office, it is around, I don't know, 10% of the whole home size, which means I can then write off 10% of my gas, 10% of my electric, 10% of my water, 10% of my HOA dues, all of those things. And that deduction actually really cuts down on the taxable income if you use it correctly. It's not something you have to track through the year. You can just do it at the end of the year at tax time. I have a free template if anyone wants that, and I can share that with everyone at the end, where you just plug in your information and then you can give that to your tax preparer and they can take it for you, or you can enter it into whatever tax software you're using to do your tax return. Along with that, you know, these days businesses are online businesses. You can write off a percentage of your internet cost based on how much you think is personal usage versus business usage, and the same with your cell phone. And then one of the other deductions that people very rarely talk about, as a business owner, you are allowed to employ your children as long as they reasonably do something for the business. So, you know, most people say, isn't that breaking labor laws? As in Kansas and Missouri, as long as the owner of the business is the parent, they can be as young as long as they're able to do a task for you, basically. So I have a 6-year-old. I pay her to tidy my office, to put returns in envelopes and stick stamps on envelopes and walk them over to the mailbox because it's just over the street from our house, all of those things. And that means I can pay her up to $12,500 a year, because that would be the point where she would have to file her own tax return as tax-free income, basically. So it goes as an expense on my return. And because she's not hitting the single person's limit for having to file a tax return, she's not having to pay tax on that either. So that is one that a lot of people miss out on. You just have to know what roles they can provide for you sensibly and how many hours a week they're kind of working, and make sure you're paying them a sensible rate in line with what you would pay someone else to do that kind of work. Okay, so business reports, once you're doing your bookkeeping and you're keeping on top of it, there are certain reports you want to look at each month. One of those, and I believe the most important one, is the profit and loss statement. So that is going to show you your sales that came in, your expenses that went out, and then the sales minus the expenses is your profit figure at the bottom. What that tells you is how much money you're making, because a lot of people think, or some people think, that, you know, I sold $100,000, that means I made $100,000. If you then had $90,000 in expenses, you actually only made $10,000 in profit. And that figure at the bottom, that is the one you're taxed on. That is the one that becomes your, you know, your money that's available for you to live your life and run your house and do whatever you want to do. That part at the bottom, that is your money. So everyone can kind of get focused on that big sales figure. And to me, the one that truly matters is that net profit figure at the bottom. The balance sheet, that will show you how much you have in assets and liabilities. It's kind of less important for sole proprietors and LLCs. It typically becomes more important when we have bigger corporations, people that have debts and all of that kind of stuff. But it is important to look at, like I said, but normally only when businesses are a little bit bigger. Sales tax, incredibly important. So if you sell any kind of physical product, we need to be keeping track of the sales tax that you collect. And then you also need to be able to run a report to know how much you have to pay to the state when it comes time to do your return. Most people are on kind of quarterly returns. So it can mean, if you make a sale January 1st, you're not paying that out until beginning of April, that you're holding on to that money for a while. So it's important to know that that money is not yours to be spent. That is going to have to be given back to the state in a couple of months' time. So having that sales tax liability report helps you compartmentalize, okay, of the money that's in my account, this portion is actually owing to someone else, and kind of keeping that in your focus, that maybe everything in the checking account isn't yours to kind of go. The cash flow statement is similar to the profit and loss. However, it also takes into account money that you move in and out of your business. So I mentioned earlier about the owner's contributions and the owner's drawings. The cash flow statement will show the level in the checking accounts and whether you had to put money in or take money out to kind of keep it where it's at. It can be a good indicator of, sales. The profit is not able to keep the cash level where we want it to be. So I'm having to keep injecting money and things like that. It can be a good indicator of, truly whether you are spending out more than is coming in and not making a profit. Accounts aging reports, that allows you to see who owes you money and who hasn't paid you. So you can kind of keep track of chasing those things down. And then payroll records, incredibly important. Paying people is the number one thing. Once you get to a point where you're going to pay people, it becomes very emotional and very, it's a different mindset than when it's just yourself paying other people, and having the records and knowing that you're kind of on top of things and everything's legit, really, really important. Okay, when should you do it yourself and when should you hire out? Honestly, this question comes up a lot. Hiring out means obviously you're going to add to your expenses. So more money is going to be going out, eating into your profits. However, again, a bit like the QuickBooks analogy earlier, if it's taking you X amount of hours per month to do it, maybe it makes sense to take that time back so that you can sell that time, or you can make money from that time instead of losing that time because you have to do the admin side of things. Does it make your business more scalable? I believe yes, because it means you have systems in place and processes in place that mean that you can replicate it and you're not having to do hours and hours of manual work, and it puts you off, getting more clients because there's more and more work that comes with having to do it because you're doing it manually. And I just think at some point, again, once you have sales tax and payroll taxes and things start to feel a lot heavier and you start to feel a little bit out of control and like, am I doing things right? The amount of people that say to me, am I going to go to jail? At that point, it's time to outsource it so that you can feel comfortable and confident. And to me, if you feel comfortable and confident, you can then go and sell your product and you can go and make more money. Whereas when you're frantic and you're scattered and you're not comfortable or confident, you kind of pull back from selling and you pull back from really putting yourself out there because the mindset isn't there, or the ability to take on more work, basically. Okay, so that was pretty much all I had to say. There is obviously a ton more information. You can follow me on Facebook, Instagram, whatever you want to. I post content all the time, lots of reminders of tax deadlines that are coming up, or little hints and prompts of like, go and do your mileage for the week and things like that, that can just kind of be little prompts if you still want to do it, your own way, that can just prompt you to kind of do other things, to keep on top of things. Like I said, I fully recommend doing your bookkeeping at least once a month. If you can do twice a month, it makes life so much easier because the amount of work you have to do is going to be halved. And I do find when people put it off, then they put it off again because it seems like a daunting task, and then it gets a bigger daunting task, so we put it off again. And then we roll around to January and people contact me anyway and say like, I can't do this. This is too much. So keep on top of it. It's not scary. It feels it until you, and if it feels scary, it probably means that you don't feel like you have it, like the system in place or everything kind of set up properly. So give yourself the ability to, to get those things set up and to feel comfortable and confident. I always say there's nothing, I can't advertise this, but I do feel when people start working with me, or they start having a bookkeeper, or they start doing their own bookkeeping and looking at their numbers each month, it empowers them to think, next month I want that profit figure to show more than it showed this month. And I find that people have returns just because they're looking at that figure, and it gives them some motivation and it gives them a baseline to base next month off and compare against. And yeah, I've seen great results from people who, had their money in their personal checking account just flowing in and out, and it was getting eaten into daily life, to, creating the processes, splitting out, getting a business checking account, and transforming the way that they see their business as a separate entity, instead of it just being a way that money comes in and out willy-nilly kind of thing, just as and when people can show up kind of thing. So there is a ton more things we can talk about. And like I said, I don't want to go too deep into specifics because I feel like it's such a broad topic. As a self-employed person, I think it's important to know if you owe more than $1,000 in taxes in any year, the following year, the IRS will expect you to make quarterly payments. Typically, what you will get from your tax preparer or from your TurboTax software is the number you owed last year split into 4, and they'll just say pay those 4. I do offer a bit more of a personalized service than that. And every quarter, we look at what your true profits are, what your other household income is, and do an estimate so that you're paying the right amount. Last year's figure may not be relevant to this year's figure if you've doubled your business. So we may need to double the amount that you're paying in the estimates as well, kind of thing. So we kind of do that on a quarterly basis. And I would encourage at least to pay what the figure they give you is. But if not, if things are changing a lot, I would encourage you to, to go out and seek a better figure that is more appropriate to the current situation. And then one other thing I wanted to mention was a lot of people aren't aware of the ability to switch to being taxed as an S corporation. So as a sole proprietor, you pay self-employment tax of 15.3%. So you pay your regular tax rate on the income, and then you pay self-employment tax of 15.3%. When you switch to an S corporation, one of the requirements is that you have to put yourself as an employee of your business. When you do that, all of a sudden you get a W-2 from your own company at that point. So you start withholding, which helps reduce your tax liability because you're kind of paying some through the year. But also it means that your business pays half of those Social Security and Medicare taxes for you. So you no longer pay that 15.3 self-employment tax. So that, again, very business situation specific, because the requirement to pay a reasonable salary means that it kind of depends what role you do, what kind of business you have. But if you get to a point where your profits are more than you would earn if you were doing your role within another business, it's probably time to switch over to an S corporation at that point. So at that point, I would definitely encourage you to reach out and speak to a bookkeeper or a tax preparer or an accountant or a CPA. All of those titles are kind of interchangeable, but at that point, reach out, because there's tax strategies you could be doing to reduce your taxable income and your tax liability without really doing too much different. Okay. Does anyone have any questions? I'm going to stop my screen share so that I can see everyone's beautiful faces.
Thank you so much. That was amazing. I have a list of questions to be selfish. I'm going to take a selfish. So I've been vigorously taking notes. If anyone has questions, pop them in the chat.
I was just looking, there's one.
Yep.
Linda said, can you do those home office deductions if you work from home, but not the business owner? No, you can't. The only way to do that was you'd have to reach out to the owner of the business and say, will you reimburse me for a home office expense? And that's kind of up to them. That's their choice whether they do that. If they do it for one, they'll likely have to do it for everyone. So again, it can be situation specific. The home office deduction is only for self-employed people who work primarily out of their home.
Amazing. Is there a magic number that we should be saving for taxes?
Most people will tell you 25%. I will caveat that with, it is very specific to individual people, because, you know, some people file filing jointly and have a spouse that over withholds on their tax return. Some people file single and all of a sudden, you know, the amount of allowable deduction is like halved at that point. So 25% is the absolute minimum, I would say, that people should save. It may be less than that, but to me, that kind of is, but it's better to save something. And personally, I would prefer people to oversave rather than undersave. So 25% is the figure that we've kind of bound out there. And that would be off net profit, not off gross profit. So not off sales. That would be on sales minus expenses. So that bottom figure, that's your profit. It'll be 25% of that.
Okay.
So Susan has had an S corp since 2001, and it saved her a ton in taxes. I've seen it save tens of thousands in taxes every year. If you make around 100,000, I've seen it make 10 to 12,000 in savings. It's that good, but you do have to go through different things. So you have to put yourself on payroll. So I partner with a company called Gusto to offer my payroll services. They are phenomenal. Just can't say enough good things about them. But you have to put yourself on salary, and it also means you have to do a business return each year. So there's little expenses like for the payroll software and for the business return that come along with it. Normally the tax savings far outweigh those costs. So definitely worth it once you hit that point. And it's something that a lot of people don't know about. It's not something that's really spoken about all that often, I don't think. Okay, anyone else have any other questions?
Yeah, I have all the questions.
Okay, ask away.
Okay, so I use the profit first method to organize my money because, you know, type A over here. So I move the percentage that I pay myself to a separate account for my owner's compensation, and then I pay myself on the 1st and the 15th. No matter how, like whatever's in that account, that's how much I pay myself. So it changes every 1st, every 15th. I've just been labeling those as transfers, right? Because it's a literal transfer to a different bank account. Should I be labeling that as like owner's withdraw?
So are you using software? Are you using like QuickBooks or Wave or?
So I use 17 Hats, which is my CRM, and they have a bookkeeping feature.
Yeah. Okay. So when you're moving between the income account and the owner's comp account, that would be a transfer between accounts that are connected. When you move it from the owner's comp to you personally, that becomes an owner's draw at that point, because you're removing it from the business accounts and you're pulling it into your own account. In terms of reporting, it makes zero difference. So don't worry, you don't have to go backwards and like catch it up or anything. It's just it's slightly different terminology because it's no longer within the business checking accounts.
Okay.
How many people use Profit First here? Just one? Two. Okay. I have a love-hate thing with Profit First. So that was why I asked the question. I love the premise of it. I think it can be too much moving money around for no gain. Sometimes it can just feel like I'm transferring money just to transfer it back out to somewhere else. Yeah. So the way that I do that with my clients is we only have 3 accounts. So we have the income account, we have a taxes account, and then we have an operating expenses account. So I don't do the profit account or the owner's comp account. Just because like I said, I feel like, especially the owner's comp, you move money in it and then you just empty it back out. And a lot of businesses have like a minimum, a business checking account, have like a minimum amount that, you know, you have to have a balance in there before you pay fees. And I feel like it just makes some funky things happen there sometimes as well. So, but it is good. The premise of it is fabulous. And the way it makes people like look at money, I think is really, really good. And if anyone hasn't read the book, I would definitely recommend reading it. It's not a hard read and it's not a super long read, but it does help with the mindset and, the getting used to business finances, that if you haven't kind of done that before.
And I would also say to read the book. Don't listen to it, because it has some really good graphs and examples. So if you're an audiobook person, I think this is one to physically pick up.
Yeah, I agree.
Does anyone have any other questions before I just keep going?
Keep going.
Okay. You were mentioning that you can take a percentage of like your phone and things like that. I just pay my phone bill with my business money. I pay my phone bill and I buy gas for my car and all of that. Is that okay?
It's only okay if it's 100% a business line. If it's a mix of personal and business, which most of our phones are, we don't normally only have one line, then you should be splitting it into proportions. So if it's 50% business and 50% personal, you can only write off the 50% that is business related, and the other 50% you should mark as like an owner's draw, or if you paid it out of your personal account, then we can like write it in at that point. And then gas, auto, so you can either do the mileage expenses or you can do actual expenses for cars. I recommend everyone do the mileage expense. It just always works out better. Gas is not all that. I know it feels expensive, don't get me wrong, but when you fill up a car of gas, and say you get 200 miles of it, you probably get more. If you said, say that cost you $30, if you said only 15 miles of that was business, all of a sudden of that tank of gas, you're probably writing off like $1, basically. It's not going to be a huge amount at all. Whereas if you'd said 15 miles at 56 cents, all of a sudden you're writing off $7.50-ish. So you normally make a lot more money by doing the mileage expense rather than the gas. So gas shouldn't be paid for out of the business account. If you're doing mileage, gas shouldn't be paid for out of the business account. That should be a personal expense. And then you just record your mileage and add that onto your tax return as a deduction at the end of the year. Does that make sense?
Yeah.
Yeah.
Because you can't do both.
You cannot do both. No, you can't do both. And the mileage rate is so good that it's very hard to kind of go against using that and doing the actual expenses instead. The only caveat to that would be is if you were big enough and you had a business vehicle that was purchased by the business and it's only used for business, then you would go down the actual expenses route, because then you would write off insurance and tags and property tax, but it would be owned by the business at that point, which most of my clients at the moment, are not at that point. Everyone is kind of, this is what they do from their home or as a side hustle, that kind of stuff.
Awesome. Okay. Who else has questions?
Is everyone ready for tax time? There's my question for you. Oh yeah, there's nods. There's nods and there's a few like meh, maybe. Kind of.
I think I was really struggling with the 1099s is what I was really struggling with.
Oh, let's talk about 1099s. So if 1099s are going to change next year as well. So I'll talk about what they are this year and then I'll talk about what they are next year. So this year, you have to issue a 1099 to anyone you pay more than $600 to through the year via cash, check, Venmo, bank transfer, anything that wasn't through a credit card processor, basically. If you paid through a credit card processor, no need to send 1099s. Do not stress yourself. The credit card processing company is going to handle that for you. You don't need to do anything. Next year, they have changed the rules. If you paid for step in cash. Yeah, if you paid in cash, you have to issue a 1099.
Well, no, for fish.
For
fish in cash. So, that was helpful for me.
What do you mean
went down
fish?
the rabbit hole. I went down the rabbit hole of the IRS
actual
website,
fish?
learning if you are on a dock and your restaurant pays for fish in cash.
Oh, absolutely. Yeah, absolutely. So it basically the 1099s, the 1099 process is to close a loophole, because when cash exchanges hands, it's not written down anywhere, right? So they use the 1099s to close the loophole, because if you want to claim it as an expense, you have to prove you paid it to someone else. And if they're not including it as income, we need a way to show that that happens. So that's what the 1099 is for. Next year, apps like Venmo, PayPal, where you can choose friends and family, all of a sudden they're also going to start issuing 1099s for amounts. So if you have family that you do that kind of stuff with and you transfer money back and forth, there's now an option to say this is for business or this was friends and family. It's going to be really important that you do that and you select, the right one that you need to do. What it will mean is next year we probably have to issue even less 1099s because less and less people transact in cash these days, and it will get rid of the Venmo ones and the Zelle transfers and all of those things. So it should make life easier, and that's the goal with all of this, hopefully.
Okay, so someone has asked, is it a big deal if your numbers on what you received from a client differ than what they sent on the 1099?
It's not a big deal in terms of, so yeah, yes and no. It's not a big deal in terms of if you put your info in the system, it just wants to make sure it matches your 1099. So if you think you got paid more, you record the 1099 and then you record the extra bit you had. What I would say is if it's different, you need to speak to the other company and find out where the difference has occurred, because someone's books are wrong somewhere, and it's best to kind of get that figured out. It's not a huge issue, and it may come down to the date that the year end falls on, and it might be like they paid December 30th, but you received a check January 2nd, so it's gone, either side of the date line or something like that. But it's definitely worth asking that question, why doesn't this match up? And it may be that they've miscoded something on their end, or you missed something on your end. Yeah, you really want to try and figure out what that difference is.
What other tax questions do we have? What are we most nervous about for upcoming taxes?
Is this year going to be a March 15th, because last year it was extended further out?
Yeah.
Is this year going to be March 15th?
So it's March 15th for business returns, April 15th for personal returns. I don't think it's going to get extended this year. What I will say, they are in a backlog still. Get your returns in as soon as possible, because they're saying it's taken like 8 weeks to get people refunds and things. Not necessarily everyone, it's just they are backlogged. Again, this year we have stimulus payments, we have the additional child tax credits that are all going to trigger some extra reviews and not help with any of that process. So I don't think they'll extend it. Could they? Yes. But I don't think they'll extend this year the way they did last year and the year before. They'll extend their processing time because they can, right? But not the time for the rest of us to do it.
I have a question about quarterly tax payments.
Mm-hmm.
Okay, so last year was my first full year in business. So I have thousands of dollars in my taxes account ready to throw all my money to them. And then this year, 2022, I'll pay quarterly.
Yep.
And I can just do that through irs.gov/payments and go that way.
You can mail a check or you can pay through the online system. Personally, I much prefer the online system because you get that confirmation and you can see that it's gone. It's not putting that check in the mail and who knows where it goes or when we're going to hear back. So yes, the online system. And again, with the states, most states have an online payment system, except Kansas. For those of us that are in Kansas, you have to mail a check for Kansas. Or is it Missouri? Maybe it's Missouri. One of them you have to mail a check for, and the other one you can pay online. Maybe it's Missouri actually, but yeah, some states have different systems going on. But again, it's normally if you owe more than 1,000 to the IRS at state level, it's normally if you owe more than 500. So it's halved at state level. So if you owe more than 500 this year, next year you'll probably have to pay state level estimated taxes as well. One thing on that, estimated taxes, they're great to pay. Personally, I would rather write $4,000 or $5,000 checks than one $20,000 check. It just feels a little bit nicer. I mean, at the end of the day, are we giving them that amount? Yes. Does it, there's two schools of thoughts on it. Some people would actually prefer to keep the money in their own account so that it's earning them some interest rather than make the quarterly estimated payments, because the amount that the IRS charges you not to make those payments, the penalty is actually really, really small. The most I've ever seen is like $100 to $125 for not making those payments. So if you feel like you would make more money by it being invested somewhere else, there's also that option as well. You're not going to get in any trouble for not making those payments other than that penalty on your return. And if you didn't make estimated payments for 2021, it doesn't matter too.
I got a question.
Okay.
I get a lot of sales tax exemption certificates. Is there a way that I can verify whether that's a legal tax exemption certificate? Like, for example, there's some churches, there's some nonprofits, and there's some people, some businesses too, that come in and give me this, this form. And I've always wondered if there's a way that I can verify that, because many years ago I got nailed for sales tax because I was just not charging the tax, and I ended up paying $36,000 out of my pocket.
Wow.
Because of an audit. So I don't ever want to go through that again.
No, you would have to call the state and ask for verification of each one, which is obviously not fun to do. However, I would say if people are giving you incorrect ones, that is on them for providing you with fraudulent and illegal documents. So you would kind of have to trust people. But yeah, if you wanted to ring the state and double check, then you should be able to do that. They should have a sales tax number on those exemptions forms. Even though they're exempt, they still have to have an account. So you should just be able to say, is this a genuine account that you have on file? And I don't know what state you're in, whether you're in Kansas or Missouri, but the Kansas Department of Revenue are very, very quick at replying. So I would even suggest emailing them a list and just saying, these are the ones I have. Are these genuine and accurate?
So I can email them then? The state of Kansas then? Okay.
Yeah, I think it's KS Revenue. I'll get the email address for you. It is KS.
Is it the same site where I pay my monthly sales tax?
Yes.
Okay. I can look that up.
Okay. Yeah, I think it's worth, for peace of mind, giving yourself that option to just have that clarified.
Thank you.
Okay. I hate sales tax, especially Kansas sales tax. Although you have a physical location, don't you? I have a lot of clients that work out their home and ship, everywhere in Kansas. So Kansas charges sales tax based on delivery location. So in Missouri, you just get taxed based on where the business is registered. So you only ever have one tax rate. In Kansas, you get taxed on the delivery location. So you could have, I think there's like 60,000 tax rates in Kansas. They need a better system. The Kansas sales tax is my opinion on that one.
Is it my understanding that if you are providing services, you don't charge sales tax, but if you're providing a product, you do?
Correct.
And does that matter by state at all?
So if at the moment, you only charge sales tax in the state where you are registered or where you have a physical presence. Is called nexus. And presence can be physical presence. It can also be what's called economic presence. So if you sell typically, and you have to check state by state, but typically if you sell over 200 transactions or 200,000 in sales, you have an economic presence within that state as well. So if you have a particular state where all of your clients are based, you may trigger a nexus there for physical products. Another thing to note though is more and more states are starting to tax digital like download products. So when people make courses and you download like a guide or an ebook, all of that kind of stuff, more and more states are starting to realize that they're losing out on taxes on those products too. So Colorado is one that charges on all digital download products. At the moment, Kansas and Missouri don't do it, but it's coming. That's because it's the future of the way business is going.
Yeah, totally. Thank you.
Okay. Any other questions? You guys are all genned up on your taxes then.
I'm at my co-working space right now, and I was going to tell the owner of the co-working space that we should have like a tax day where like we're all at our computer, all doing our taxes on the same day, so we can commiserate together. Let's order lunch.
Yep.
Do it all together.
I have thought about doing a drop-in somewhere where people can just come and like bring stuff and just get it done for a day, and having like a physical presence somewhere for a couple of days over the next couple of weeks and see. But I don't know whether that's something people would go for and all of that stuff.
I mean, that's what they do at H&R Block, right?
They do, yeah.
Well, awesome. Well, if there's no other questions, then we can have 15 minutes of our afternoon back, and I will save this recording and we can just go on with our day. Last call for any questions?
I was going to say, someone asked in the chat if the recording will be shared. Are you planning on putting it on our YouTube channel?
Yes, I'm planning on putting it somewhere. Have I decided where? I'm not sure, but yes.
Okay.
Yes. Rhian, do you want to throw your email address in the comments one more time, just since your slides aren't up anymore? So copy this down, and if you have any other questions, feel free to shoot her an email directly, or if you miss it, just reach out to the Freelance Exchange and we can do that. So our next monthly luncheon is going to be the last Friday in February, which is the 25th. I'm almost finished putting all of that together, so you'll start seeing the promotions for all of that. Again, if you have other suggestions or topics that you would love to learn about, feel free to send me an email and I can get all of that sorted out for you. So thank you so much. We appreciate all of your insights and expertise and answering all of our questions. So thank you so much.
You're
Thank you,
welcome.
Rhian.
Thank you.